Palisade Radio is brought to you by First Majestic Silver Corp, one of the world's purest and fastest growing silver mining companies.
Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. On the line with us today is a new guest to the program. Very happy to have him. It's Ian Ball, President and CEO of Abitibi Royalties. A lot of people are probably familiar with the name as he's been around in the industry for quite some time, and he's worked in the past and still does to this day with Rob McEwen. Ian, welcome to the program.
Thank you for having us today.
Yeah, and as we were talking before the interview here, you went through your background that got you into mining. I thought I had started young, but you were saying that your background in mining went all the way back to when you were 5 years old. If you don't mind just giving a brief overview of that story again, it would be great.
Yeah, no, I'd be delighted to. I grew up with mining because my parents were investors in mostly junior mining companies. And they had me, looking at mining stocks at the age of 5. And so it was always discussion around the dinner room table, gold mining, exploration success, and the amount of wealth that it could generate on the back of discovery. So it's always been very intriguing for me. As I sort of, went through school, I became very intrigued also in terms of how different mining companies were run. And it seemed to me it was quite clear that the best mining company in terms of its management, in terms of its assets, was Goldcorp. And this was back in 2002, 2003. And so I was very fortunate to have met Rob McEwen at that time, and him then offered me a job to go work there.
And so from there, Ian, you became the president of McEwen Mining. And if you can give a brief overview of your time there and what you're doing now.
Sure. Well, after Goldcorp, because if you think back to 2005, Goldcorp merged with Wheaton River, and the head office was then subsequently moved to Vancouver, and Rob had stepped down as CEO, which was always his intention. And then we went out and started a small company called U.S. Gold, which then became McEwen Mining. And I, had started at U.S. Gold, and then slowly started to move into the explorations operational side, and started in Mexico with a small exploration budget. We were fortunate enough to make a reasonable sized silver discovery that now has all of its construction permits and is scheduled to be one of the 15 largest silver mines in the world. And then on the back of that, headed up a team that built what is now McEwen Mining's main operating asset, the Gallo 1 mine in Mexico. And then off of with those two successes, then being promoted to President of McEwen Mining. And that would have to be in there for about 10 years.
Great. So now you're working with Abitibi Royalty, and I think a lot of our listeners have seen many of the press releases. You guys have been doing what you're calling a royalty search over the past few months. But essentially, if you can outline the concept for potential shareholders behind how you guys see making money, it's quite a unique business model that I don't think has been executed on before.
Well, we look at Abitibi as having almost like a number of divisions inside of the company, and the one is the royalty search. And if you think of any job of the CEO, it's allocation of capital. And, mining companies, we've done an absolutely horrible job of allocating capital. And so when I was working at Goldcorp and then McEwen Mining, what became one of Rob's primary themes is that if you do the average, you should expect to get the average result. And most mining companies do the same as everybody else, and that's why most of them are all in the same position. And when I look at the world in terms of mining, oftentimes it's not large sums of capital that generate the highest return. Usually it's small sums deployed in a different fashion. And so when we looked at it and said, well, it's a tough market right now, there's a lot of prospectors and junior mining companies that are having a difficult time in terms of their financial position. They cannot pay the claim fees that are coming due, and therefore they're going to have to drop the properties. And I said, well, would we be willing to pay the property taxes on their behalf, and in doing so, getting back a royalty? And we've also asked that should the properties be sold, we would also get 15% of the net proceeds. But we are looking for properties that have certain characteristics. They have to be near a mine site. they have to have good geology, and they have to have signs of mineralization through previous exploration. And I thought if we could build up a portfolio of 25 to 30 of these, we might walk away with 2 that end up being successful. And to date, we've had 70 plus submissions. We've completed 8 transactions, and we're continuing to review submissions as they come in. So we've been pretty happy with what we spent. And today, I think for the first 8, we spent $90,000.
I want to dig in a little bit deeper on this model behind paying for the claims fees and in turn getting a royalty and some upside on the project. The purest form of speculating in the mining sector is picking up or staking projects and holding them from the cheap point of a bear market into the craze that comes into a bull market. And that's essentially what you guys are doing. I mean, I've looked at some of the press releases coming out, and the cost to cover these claims fees are quite low, and you're ending up with a substantial royalty. But for our listeners that aren't as familiar, what's the value of the royalty? I mean, some of these assets are not going to become a mine, and even if 2 of them do, it's going to be a long time out. So if you can explain how these things become valuable just through a bull market emerging, that would be great.
Well, if you look at some of the royalties that we've acquired, a couple of them are 200 meters away from an operating mine. So they're very, very close. And, a lot of the geology indicates that the mineralization may trend over where we have the royalty. And you are right, where even if there is a discovery, it could be some time before you see cash flow. But if you look at the industry and the history of mining, the history of royalties, the best royalty ever purchased was by Franco-Nevada in the early to mid-'80s, on the Gold Strike mine. And that's when Barrick then subsequently made the large discovery at depth at Gold Strike. And if you look at Franco, it wasn't so much the cash flow that was the driver of their share price. It was the exploration success and knowing that cash flows were coming in the future. And I think it's, this way, if an exploration company has a good drill hole and their share price starts to increase because you are building the underlying value, we suspect that the same thing would happen initially here if any of these properties was to have a resource, and that value would continually be increased as they get closer to production. The thing that we like most about these is that they're all right near a mine site. These are not, in an area that has no infrastructure. They're 200 meters away, 500 meters away, a kilometer away from where usually substantial mines are operating.
And for the benefit of our audience, Ian, can you explain how a royalty is tied to a project, when a royalty goes away, how it sticks with the project as long as the project remains in good standing, et cetera?
Yeah, and it's a good question because royalties, in terms of what are their legal standing, they do vary by jurisdiction, and so you have to know the underlying rules that are applicable. Ontario, for example, in Canada is different than Quebec. And it might seem strange that you're all in the same country, but one is common law, one is civil law. So the rules do change. One thing that we are building into our agreement is saying that once the claims come due again, we are putting in a clause that we'll be willing to pay the claim fees again for a higher royalty. So that's one way that we can maintain, if we like the property, that it ensures that it stays in good standing and doesn't go into any default status.
Okay, thank you for the clarification there. I want to shift gears a little bit and talk to you about the industry that we're in, which is oftentimes, as you pointed out, mismanaged, money is misallocated. And much of your career was started at Goldcorp, and you said that at the time it was extremely innovative, shareholder friendly. Of course, there was what I believe was referred to as the challenge, which was that first online exploration challenge. It was a huge success and has now been replicated a few different times. Can you talk about the use of technology and the internet in how you've gone ahead and worked in the mining sector?
Well, I think the internet has a lot of uses in terms of its reach to connect people, to bring in new ideas. And you did see that with the Goldcorp Challenge. And you have to remember, that was back in 2000 when the internet really was at an early stage. And what you're able to do today versus then is obviously it's been drastically increased. So there's more we can be doing on the internet. And if you think about it, other companies have tried it, but without a lot of success. Barrick would be an example where they had a challenge on metallurgy. This was at 2006, where they put up a prize of $10 million, I believe it was. But I think the problem there was they didn't have an internal champion keep pushing it ahead. And I think without that, a lot of these initiatives end up failing, where I think Rob was a very good example where he came up with the idea, was the internal champion, and continued to push it so it became a success. I think that's the key. And we've tried to use the internet saying that, rather than trying to talk to people individually about what claims they want to have in good standing, we've created an online platform where you can submit all your technical data online, and you'll have an answer within 48 hours. So I think that's a much more efficient process. And those are just two examples. But in terms of innovation technology as a whole, right now we're seeing a lot of cost cuts in the industry, but it's just cutting costs. It's not innovation, and the two should not be confused. And to give you an example, 2 years ago I went down to the Caterpillar factory in Illinois, and my question was, why are we not developing an electric haul truck? Because according to the work that I had done, mining costs would go from, and this was in Mexico because this is where I was primarily working at the time, mining costs would go from $2 a ton to $1 a ton if you could move from a diesel to an electric haul truck. And I thought, okay, well, that would drastically impact the economics of a mining operation. And Caterpillar's response was, we don't do electric. We only care about expending the hours on a diesel engine. And I thought, that's the wrong mindset for the mining industry. And I think we need to push the suppliers to work harder on the innovation side.
Wow, that's very interesting. Well, Ian, at 34 years old, you've ridden a couple of cycles up and down, and I wanted to talk to you about where we are at right now in the cycle. I think actions speak louder than words, and certainly with you picking up assets under Abitibi and other projects you're working on, it would indicate that you think we're near a bottom. How do you see things developing over the next couple of years? Are we close? Is the bottom behind us?
Well, a couple of things. You are right. We launched the royalty search on the back of, it's a very difficult time in the market. 4 years ago, we could not have done the royalty search idea because there was a lot of capital available. The other things that we've done to sort of show that we think it's a good time to be buying is that we're one of the few companies that have launched a share buyback program. So rather than issuing shares, we're buying back our shares currently. And the other thing is I've agreed to take all of my salary in shares versus taking it in cash. And that's also with my belief that the share prices are going to go up, not down. In terms of where we are in the market, it's I think trying to pick a spot or a price in terms of where a bottom is, I think that's a very difficult thing to do. I sort of try to look at it in terms of where are we in the cycle. And this might sound like I'm giving myself a lot of a buffer, but I think we're in the bottom 20 to bottom third of this downward trend. If you look at the technicals, which I know I'm not a big believer in technicals, but if you look at the charts, you would assume that gold's going to go to 1,000. It's probably going to overshoot 1,000, as you typically always overshoot support to some degree. So whether it's 975, 950, 925, I think gold's going to go there somewhere in the next 12 months. Knowing that it's very difficult to do deals and markets can turn around quickly, we've looked at it and said we feel we're in the bottom third of the market. That's safe enough for us to start deploying our capital, whether it's share buyback, asset acquisitions. And we think within the next 12 months, we'll probably see the bottom, but we don't know where that will be, and we don't know how quickly it would recover from there, or whether it sort of just starts to tread water for some time.
And what do your past experiences in bull markets tell you that the type of gains will be made for investors? Obviously depends on if you're going to the ground level purchasing assets like yourself, or if you're buying mid-tiers or majors. But what will you expect over the next few years?
Well, it's an interesting question, because I just to sort of give you an example. If you go back to 1995, this is when Goldcorp made the high-grade zone discovery at Red Lake, and the shares did very well off the back of that. Then we had, in 96, we had Bre-X. We then had gold prices starting to decline. They continued to decline to 97. And then they ultimately did a double bottom in 1999 and in 2001. By the time you got to 2001, Goldcorp, despite having arguably the best gold discovery in 10, 15 years, was back to the same price they were pre-discovery. And then if you look at it, saying, in hindsight, it made sense. Here you have a deposit that ended up being 5 million ounces of gold at 88 grams per ton gold. You think about it, that's almost unheard of. It is unheard of. So I think, and then if you had the nerve to buy at that time, the gains were phenomenal, going from 2001 to 2005, 2006, where the share price ultimately went from $5 in 2001 to $46. So big gains can be had there. And that was of a company of reasonable size. So I think right now people should be looking at companies that have good assets, good discoveries, but are trading at fractions of what it even costs to discover those deposits. And I think there's a few of them out there right now.
Yeah, that's great. Well, Ian, at this point, I want to ask you if you have anything to add, any suggestions for our audience members, and also if you could give us some more information on the companies you're working with and where people can find out some more information, that would be great.
Well, I would say, as the thing that you really come to appreciate over time is that with a lot of these mining companies, you should be looking at the share dilution. I think that's what's been a killer in this industry, and that the cost of capital to finance these companies is quite high. And you're looking at companies today and saying, well, they're cheap and I should be buying shares, but do they have any money? How long will that money take them? And if they had to do a financing, how many more shares would be issued plus the warrants? So it's a bit of a cautionary tale to be had there. In terms of other mining companies, I only invest in one, and that's Abitibi. I don't invest in any others. There's specific reasons why I think Abitibi has a good story in terms of its fundamentals. But I do think that there's other companies out there that are doing good work. But it's still a bit of a cautionary tale that right now you have an opportunity to probably buy a handful of very good companies at a reasonable price rather than trying to buy companies that are just cheap for the sake of being cheap.
Okay, well, Ian, thanks so much for coming on the program. Really appreciate it. And we'll try and get you back on next year, maybe in a better market, maybe not.
Okay, no, that sounds good. Thank you for your time today.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen? Or are you too stupid?